It's your job to go make money, to go invest money, to go be successful out there. But unfortunately, so many people are victim mentality. I'm getting 50% off this stock. It's a huge deal. This is exactly what you want to see in a turnaround company. You get the stock at 219 to 282 come 2029, which gives you a compounded annual growth rate between 50 and 60%. I can see a scenario where the stock over the next few years gets to $500 to $1,000 a share. Meta kind of let me down in regards to that stock price this year. It definitely held back the public count. If the market's going down, Tesla's going down in Chinatown. It's as simple as that. Palantir, complete wild card. Let's say the market tanks in January. Big drama fest. Okay. Whew. What do you do? 2025 is nothing but a thing of the past. It's just dust. Goodbye, my love, 2025. It was a pretty good year for us. It was a successful year, I would say, 2025 was. 2023, 2024, those were banger years for the public count. This year was a successful year, but I wouldn't call it a banger year, but it was good. We started the year right around $3 million, just under $3 million of public count, ended the year right over 3.7 million. So definitely a successful year. Congratulations to everybody that had some success out there. You should have been at least in line with the market, or hopefully performing better than the market over the past year and over the last several years. Meta kind of let me down in regards to that stock price this year. It definitely held back the public count. That stock was only up around 11% roughly this year, and so definitely held us back because that's such a significant position in the portfolio overall. But I do have faith in Meta long term. It's not a stock we're going to speak about here today, but definitely have faith in that one long term. 5 stocks I'm buying January 2026 edition. Welcome in, ladies and gentlemen. This is going to be a very exciting video here today. Hope you really enjoy it. I have some absolute banger stocks to share with you in this one here today. Some incredible opportunities, not only for 2026, but in future years as well. Whenever I do one of these videos, it's not just important about what stocks I'm speaking of, but also the businesses. This is like a little masterclass in business we're going to go through here today. I've been playing this game for 17 years now at this point in time, investing my own money. I've been fortunate to now build up to an 8-figure plus net worth, and I'm going to take you through exactly how I analyze these businesses here today in this video. One thing and one thing only I need from you, if you could just smash that little thumbs up icon, and to everybody that's been smashing all year for me in 2025, I appreciate each and every one of you. And if you haven't joined us yet in the Smash gang, let's go ahead and do it in 2026. All I need you to do is hit that little thumbs up icon. That's all I need, okay? If you want to be subscribed here to the channel, you can certainly subscribe to see more of my videos. We are now up to, we're going to end the year at 909,000 subscribers. We'll see what happens in 2026. Hopefully we get up to 1 million in 2026, but if not, that's fine with me. I'm just happy anybody watches my videos. I appreciate you for being here, okay? If you want access to all my best course curriculums, access to my private Discord chat, 1000xstocks.com, access to see the moves I'm making each and every week, exclusive weekly videos, all that good stuff. There'll be a pinned comment down there. Fill out a form to see if you can join us in the private group. It is closed to new members right now, but we're basically just adding to the wait list. We're going to open it at some point in time in 2026. So if you want to get added to the wait list, get to the front of the line. Once I reopen that group back up to new members, there's going to be a flood of new applications coming in. So if you want to be at the front of the line, now's the time to do it. That will be the pinned comment down there. We already have 100 plus on the wait list, but that's nothing compared to what we'll have once it completely reopens to new members, okay? Alrighty, guys, so let's get rolling here. Number 1 of these 5 stocks is Nike. Ticker symbol on this one is NKE, Nike. So first I need to explain what makes Nike's business model so successful. Decade after decade, generation after generation, over and over again, so we can understand this. Then we'll get into the stock of Nike, okay? So Nike's a company that really focuses on sports specific. They do it better than anybody. And if you've ever played sports on a high level, you know Nike is the dominant brand. It doesn't matter what sport you play. It doesn't matter if you play American football, track. It doesn't matter if you play basketball, soccer. It doesn't really matter what you end up playing. Like, Nike ends up being the big time brand in that sport overall, and they've built a successful business. And so for me, somebody like me, I always had Nike football cleats, Nike track spikes when I ran in college, and still this day, as a 36-year-old man, I still wear Nike continuously, and it's my go-to running shoe, just wearing around shoe, workout shoe in general. Love the brand. And what do I buy my kids when my kids need to go play sports? I buy them nothing but Nike at the end of the day. So Nike's done a phenomenal job of bringing people into the ecosystem, and then those people end up up being very exclusive with Nike. Some people are kind of like, they don't buy Nike at all, right? And that's their decision. Some people are like, buy some Nike products, but they're not exclusive to the brand. And then you have other customers like myself that are like literally exclusive. Like, I'm not going to play any sport, or I never buy any other shoes other than Nike, essentially. Like, you're not going to see me wearing Adidas or Under Armour, or I don't know, I guess Lululemon makes shoes now. Like, no, you're not going to see that, okay? And so Nike's built a very successful business. And how have they done this? They've done it through really two ways over the last several generations. One is through innovation of their products, and the other is through athletes, and basically buying sponsorships of athletes, of we can call it sports leagues, things like that, and always being known for successful in being around successful athletes and success in general, right? And so what Nike's done amazing over the years is now they've gotten to a point where they're not just basically sponsoring athletes, but they're sponsoring leagues. So you look at an athlete that's very exciting in the NBA space. If you watch NBA basketball, you'll know this gentleman I have in front of you right now. If you don't watch basketball, you might not know of him yet, right? His name's Cooper Flagg, one of the most exciting prospects to enter the NBA in quite a long time, right? And he did not sign with Nike. Yet every time that man goes out there and plays basketball and scores 1 billion points and does all these amazing things, he's got Nike logos all over him. So it kind of leads you to think like, oh, that might be a Nike athlete, right? Steph Curry, amazing basketball legend. And yet every time he goes out there and plays basketball, you think he's signed to Nike or signed to Jordan, right? But actually, Steph Curry has been signed this whole time to Under Armour, which was a huge mistake in Steph Curry's career. He signed with Under Armour rather than signing with Nike. Huge mistake in the end for him overall. He would have made way more money, had way more success and way more fame and notoriety, and, you know, even a more legendary figure if he had just signed with Nike. But he decided to go with Under Armour, took a risk. It was a huge mistake in the end. And now those two have ended up breaking up over the years, right? And more athletes are starting to figure out, they've tried to, you know, a lot of these athletes are trying to sign with other brands over the past, I would say, decade, like Under Armour, New Balance, things like that. And what they're finding, because you got to understand why it's important that if you're a best athlete, you end up signing with Nike. Even if Nike offers you a little less money, it actually ends up being a better long-term decision with Nike. And I think more and more athletes are starting to wake up to this, essentially. You look at somebody like Sydney McLaughlin. Now, I would say 90% plus of people watching this video, you never heard of this woman before. She's the most amazing track athlete we've seen since Usain Bolt. Absolute phenomenon. She should be a household name inside the United States of America and honestly around the world. But she made a decision to go ahead and sign with, if I recall, New Balance, okay? And huge mistake, because this woman, if she had signed with Nike, right, and look at all the Nike logos all over her. This is where I'm talking about, like, Nike buys out sports, essentially. So you would think these athletes are signed with Nike when they're not actually signed with Nike. But she decided to go with New Balance, and their marketing is just not good. And they don't platform her the way Nike would. Do you know every time this woman goes to set a new record, you know how many commercials Nike would be putting all over the TV and all over social media and everywhere? Because Nike loves to parade their athletes around. They're successful athletes, the record breakers, the one doing special things. But instead she went with New Balance, and New Balance, they don't parade their athletes the way they should, like somebody like a Nike does with their legendary ads that they have continuously over the years. You look at somebody like Caitlin Clark. This is I would say the most famous known person in the WNBA space, right? And she had a big decision to make back in 2024. Who was she going to sign with? And Under Armour was out there, Adidas was out there, and there was every brand wanted to sign her essentially. And she ended up going with Nike. And I think she's seen enough of these other athletes trying to sign with other brands, and ultimately them not being platformed the way they should. And so she ended up making the decision to sign with Nike. And I don't even know if this was as big. Maybe she could have got more upfront money by if she signed with Under Armour or Adidas, or who knows, maybe Lululemon. I don't know who else wanted to sign her. But ultimately, it ends up being a much better long-term decision to sign with Nike, because they will platform you. You do amazing things, you're going to platform you a lot higher than anybody out there, right? Now, even this was interesting. My wife just bought a new pair of shoes actually like yesterday. And I was like, oh, what are they? And she showed me the box. I guess this is another WNBA player, plays for a team here in Vegas. And she really liked these shoes. And it's just, look at the package, look at the presentation of these shoes overall. That's what Nike does for these athletes. And so if you're an athlete, if you're really like a top tier athlete, it makes the most sense to sign with Nike. They're going to give you the most exposure. They're going to build your brand the biggest. You're going to have the most success with them. That's just bottom line, right? And Nike has now gotten in with the sport so good, they're just so synonymous with sports and success that they basically set themselves up for generations to go in the future, and they just continue to execute on this between the innovation and the athlete side, right? And so that's the business. That's why they're so successful. And they have their market, right? Not everybody is going to be a Nike, somebody that wears Nike products. Like there's plenty of, you go to the gym, there's plenty of women out there that wear like Lululemon and Viore and things like that. Real athletes wear Nike. Like that's just the way it is. Like you're a real athlete, you wear Nike. Go to any, top tier women and see what they're wearing in athletic space. Wear Nike. Like it's just bottom line. Go to any track in the United States of America, any university, and see what those women are wearing. They're not wearing Lululemon to go run around in. They're wearing, Nike. That's just how it is, okay? And go to, any college in the United States of America and look what the top tier athletes at that university are wearing. They're all wearing Nike, okay? No, Nike stock. So now that we understand why Nike is such an impactful business, it's successful generation after generation, continues to build. Now let's talk about the stock, right? The stock, I'm getting 50% off this stock. It's a huge deal. Now, sometimes people see a stock down and it worries them, right? It doesn't worry me because I understand the business well. The thing I just took you through there and why Nike's going to be successful to years and years to go in the future. So I get a 50% off. Now it's like getting a 50% off a pair of shoes you want or something like that at the store, right? The old CEO made a lot of mistakes with the company. He came from the consulting world, made a lot of mistakes. We don't need to go through all that in this video here today. I've done that plenty in the past talking about Nike. So if you want to go back in my video catalog and watch me talk about the mistakes the old CEO made, but you can talk about those. Okay, but the moral of the story is that's all the thing that passed. Elliott Hill's now been at the company for over a year. And the old stuff is old stuff, and the company's moving forward now at this point in time. I'm getting the whole business for around $90 billion as of right now, about a $90 billion market cap, which puts the market cap all the way back to 2015, 2016 pricing. Very attractive. That is very, very attractive. If I think about where the business was a decade ago versus where the business is now, I feel much more comfortable buying the business today than back in 2015 or 2016. Now, additionally, when you look at the price to sales ratio, this is a good chart to look at because, Nike's made a lot of changes with the business model. So the earnings per share, they've had tariffs and everything. Earnings per share has kind of been messed up in 2025. So I think price to sales ratio is actually a better thing to look at if you want to look at how big of a discount I'm getting. And Nike's price to sales ratio is all the way back to where the stock was in 2013. So when I talk about I'm getting a generational discount in buying Nike right now, this is a generational discount on Nike. Now, you might want to say, okay, but are we sure Elliott Hill, the new CEO, is turning around the business? What are we seeing with the numbers? Are we getting some concrete data, some facts, right, that are showing like, okay, he's got it. The business is turning around. And the answer is absolutely. It's right in front of your face. If you look at, this is like the old CEO, Mr. Consulting. Look at how he was missing numbers. Misses earnings per share right there. Misses revenue, misses revenue, misses revenue, misses revenue. You can't trust a CEO who continually misses numbers, right? Look at since Elliott Hill took over. Earnings per share beat. Look at the revenues beats. Beat. 247 mil beat. 235 mil beat. $373 million beat. $730 million beat. $218 million beat, right? Huge beats on the revenue line items. We're not missing, we're beating. So this is proof that Elliott Hill understands the game of Wall Street, understands how to come in and beat analyst expectations, beat the company's expectations, and set the company up in a situation where when they go to announce their earnings numbers, you are not scared. You are excited. This is very important. Why is it very important? No one wants to hold a stock where every time the company's earnings coming up, they're scared because the company might miss numbers again. And that's what the old CEO was doing. He was continually missing numbers. Now we got Elliott Hill. If Nike goes to report their next quarter and their next quarter and their next, I'm not scared. I feel very comfortable that Elliott Hill will come in, do his thing, and beat the numbers, beat the expectations. That's what you want to feel when you're going to invest in a stock. Very, very important, okay? Now, additionally, if you want more proof that the business model has bottomed, look at the operating income. What we're looking at right now is 1000xstocks.com, and you're going to see that the operating income has bottomed and is now trending up. That's a very important thing if you want to understand if the business has bottomed or not. Additionally, look at the margins. The margins had a huge move down initially, but now it looks like gross margins and net margins are flatlining, which means the next likely move up is up and to the right. now at this point in time, right? And they had to go through a lot. They had to clear a lot of inventory. 2025 has been a huge year of clearing inventory in the U.S., putting the U.S. business back in a great position. Now U.S. is showing very strong, like incredible strength if you look at the numbers. They're also resetting in China as well, which is a huge market for them. And China should be set up for growth again in the back half of 2026, which is going to be very exciting for the margins of this company and the revenue of this company. So margins look set to start to move up again. Additionally, look at the earnings per share, right? This is where we're at right now on a trailing 12-month basis. We're expected to start uptrending the earnings per share again. This is everything. We're seeing revenue start to uptrend. We're seeing margins getting ready to uptrend and earnings per share getting ready to uptrend. This is exactly what you want to see in a turnaround company. Additionally, look at the revenue growth or shrink per quarter, okay? The worst quarter was a couple quarters ago. The revenue was down 12%. This is a resetting of inventory and all the stuff we just spoke about, right? And so what has happened now is the company is back to growth. 1% revenue growth last quarter, 1% revenue growth the latest quarter. That might seem kind of sleepy, but when you go in a matter of a few quarters from negative 12% revenue now positive, it's a huge flip. And it's a huge sign that you're getting ready for likely much stronger revenue growth when you see a flip happening like that. Additionally, you haven't even seen China revenue start to uptrend yet. China revenue, they're still resetting that market. Converse business, they're still resetting the Converse business as well. Both those businesses should be fully reset by the second half of 2026. So you're going to start to see not only the US business, but you're going to see the European business, the China business, other Asia, and the Converse business likely all get back to growth in the second half of the year, which is going to be very exciting for where the company's revenues are going to trend, obviously in 2026, 2027, and beyond. Okay, so when it comes to Nike, this is a $100 plus stock again in the future here. It's possible in 2026, if not 2026 and 2027. And so Nike's a stock I'll feel comfortable holding for years to go in the future. Okay, I hope I did a great job explaining Nike as far as a business model, why it matters so much, how they're ingrained in sport. All those sorts of things there. I hope you guys got a lot of value out of that portion there and why the stock is very attractively priced right here. Okay. Alrighty, next up here, number 2 of these 5 stocks. Let me just say one last thing about Nike before we go to 2 of 5. Is there was always questions about competition. Nike's had a history of competition. There will always be competition in this space. Brands come and go. There's a hot brand, for 3 to 5 years, and then that brand falls off. And the reason is these brands can never stay with somebody like Nike because Nike invests so much money, like billions of dollars a year, into athletes, into sports leagues, things like that. And other ones just can't do that. They're not willing to do that. They don't have the margins to support it. And so Nike's able to, fend off the competition decade after decade, generation after generation. So I just thought I would mention that as well. And competition is nothing new. It's been something they've had to deal with since the 80s. Number 2 of these 5 stocks up is Celsius Holdings. CELH is a ticker symbol in this one. This is an energy drink company. Now, this company has their very successful Celsius brand. I'm sure a lot of you guys might even be aware of this. And the thing that Celsius has done very well is people love the product. That's something I continuously hear. Like, people love this product. They think it tastes great. They love how much energy it gives them. They feel like they can conquer the world on this product, right? They love it. And the company's done a phenomenal job marketing the business to a lot of people that are into going to the gym and fitness in general. And they've taken a very different approach than what other energy drink brands in the past. They've even done things like sponsor athletes. Remember I was just talking about Nike and their sponsorships of athletes and those sorts of things and in leagues. Celsius has done that as well. Celsius has sponsored many athletes over the last couple of years. And so they've done an amazing job marketing to the fitness community, people that go to the gym, people that do CrossFit, all these sorts of things, right? And also just people that go to work in general. Whereas if you look at the previous energy drink brands like Red Bull, Monster, things like that, right? Now, a lot of those brands were kind of more known for like the party scene or like extreme sports, and that's how they really marketed their brand. Red Bull, Monster, brands like that, they weren't really going after the person that's going to the gym and needs a pick-me-up. They were going after the person that's, college kid, like that likes to dirt bike, or high school kid or whatever, right? Or people that are partying and want Red Bull and vodka and those sorts of things. Like there was a different way those brands really thought about who is their core customer, right? Like who's buying that product. And Celsius has just gone about it very different, and they've been incredibly successful. And if you go to the gym, I'm sure you see a lot of people drinking Celsius, right? Now, additionally, they own a new brand called Alani Nu. And this brand has been an absolute growth engine the last several years, and Celsius just picked it up in the last year or two. And Alani, what's very exciting about, really in the past year they picked it up, what's pretty exciting about Alani and what makes them very differentiated in the energy drink space is they've really gone after females specifically. That does not mean every single person that drinks Alani is a female, but that has definitely been their big focus. Now, the reason that's so exciting, this is what makes Celsius such a special brand, is they're tapping into markets that haven't traditionally been targeted by the energy drink space. Like I said, like energy drinks were never big really in the fitness space. Celsius has been huge in the fitness space. Females, like if you really, like I worked at Walgreens back in the day. I worked in management at Quick Trip. I saw countless customers come to buy energy drinks. Guess who came to buy energy drinks? Men. Women almost never came to buy energy drinks. All the construction workers, the landscapers, they would come in, buy Monster. This is obviously 10, 15 years ago. I worked in that industry, but, they would come in, buy them 2, 4 at a time, Monsters. And then Red Bull sold decent, but it wasn't that great. But Monster was kind of the big brand. And then, you get Rockstar and some of these other brands to sell. But it was always men. Always men. Like almost never did a female come up with 2 Monsters in her hand to go buy. No, that was not a thing. But Alani, you look at their customer base, heavy female, like heavy female. And so that's what makes Celsius really successful, is like they're able to tap into these markets that are just never really anybody's really been successful there. And Monster couldn't do it, right? Because Monster already has their demographic. And so Monster can't try to go and target the female demographic in any major way. And Monster tried a lot of things. Like I remember Monster would launch like pink cans of Monster and these different things. It's just never really successful because the whole brand has to resonate with a customer base. I remember Red Bull trying a lot of different things in marketing to try to market to females. At the end of the day, it's just if your brand's already set with certain demographics, it's very difficult. Like let's say Alani wanted to pivot now and say we want to attract a huge male demographic. It'd be incredibly difficult. I don't think they would be very successful in attracting a bunch of men to go buy Alani because their brand's already set. People have seen the brand. They see it's already like a certain demographic drinks it. So to try to get it out to another space, very, very difficult, right? And so just something to keep in mind there. Now, additionally, Celsius now has a Rockstar brand as well. They just picked this up from Pepsi. This is a complete wild card. This brand, from my understanding, has about 1% market share. It used to be, if we go back 10 to 15 years ago, it was actually a major competitive threat against Monster. Monster won. Huge. Rockstar ended up getting picked up years ago by Pepsi. Pepsi ran into the ground. Pepsi's just very unsuccessful in the energy drink space. Like they tried a lot of things, as Coca-Cola did, just unsuccessful. Coca-Cola ended up buying part ownership of Monster, and Pepsi's now, guess what they did? They bought part ownership in Celsius. Celsius has around 20% roughly market share now at this point in time between Celsius, Alani, and Rockstar, right? And they should hopefully continue to grow that market share overall. And so Pepsi owns around 11% roughly of Celsius, and Pepsi's very incentivized for Celsius to be successful because they have such a big ownership stake, and Celsius now distributes Pepsi around as well. So both brands are kind of tied together, and this is a much smarter way for Pepsi to be successful, hopefully, in energy drinks than trying to go at it alone, because they tried and they failed. And then they watched what Coca-Cola did with Monster, and they're like, we should probably try to do this, something like that. Red Bull probably didn't seem interested, and so what they ended up going with is Celsius, and I think that's a partnership that's very intelligent for both sides, okay? Now, additionally, we're showing you 1000xstocks.com revenue here on a trailing 12-month basis for Celsius is where we're at right now. It's where we're expected to go. We call that a blast off in regards to revenue for Celsius. Additionally, the earnings per share is up next to blast off to the moon. Very exciting. Free cash flow exploding to the upside as well. What are my projections for Celsius? Keep in mind this could be conservative, but I have the company doing just under $3.2 billion of revenue in 2026 and around $392 million of net income. Should be a much cleaner year on the net income side. Now their acquisitions are going to all be done, so it should be a very clean year for the company overall in 26. So 392, that puts them at net income margins of 12%, which isn't, it's not horrible, but it's also not great. It's okay. 12% net income margins. I have them doing 15% revenue growth per year after that for my bull case, and 25% net income growth per year on average after that. That puts the stock based upon, if they're growing at those sorts of growth rates, 35 to 40 P is pretty fair. 114 to 130, 131. So that's 25% CAGR to a 30% CAGR there on Celsius. And keep in mind, my numbers might be conservative. I'll show you some of my private stock group members' numbers here in just a moment. Base case. My base case has them doing still basically the same numbers in 26, but then after that, taking revenue down to only 10% per year and net income down to 20% per year. And that about a 28 to 33 P would be fair for a company like Celsius in the energy drink space, growing revenues at 10% a year and net income at 20%. And so then the stock would be somewhere around $78 to $91. Give me a compounded annual growth rate of 14% on the low end and 19% on the high end, which is good. Like, that's still significantly above, I highly doubt the S&P 500 will have a compounded annual growth rate of 14 to 19% over the next 4 years. Very unlikely in my opinion. But Celsius can do that. That's pretty darn good, right? Now look at some of my private stock group members and some of their numbers, and you'll see why maybe my numbers are maybe a little conservative. So this member has revenue growth of 35% here for 26. And then they have them getting to $597 million in net income, getting to net income margins of 18% here. They're doing 32% the next year, 30% revenue growth, 25%, 35%, 35%, 35%, 35 to 45 PE. And now you're at a situation which that's actually probably undervalued PE if they're growing top line at 25% and bottom line at 35%. You get the stock at 219 to 282 come 2029, which gives you a compounded annual growth rate between 50 and 60%. That's pretty darn exciting. Look at this member's base case here. 32% revenue growth in 26, 30% in 27, 25% 28, 25% 29. We're talking about a stock in their base case here that gets to 140 to 186, 34% compound annual growth rate on the low end, 44% on the high end. Just keep in mind, my numbers might end up being conservative in the end, but my numbers are still very, very attractive. And so with me with Celsius, I'm up about $87,000 in the stock in the public count, up 89%. It's right around 5% weighting for the public count overall. However much Celsius goes up over the next few years, it's all gravy. It's all gravy. It's all good, And so, do I see any major competitive threats? Because we just spoke about competitive threats with, Nike there before we get into number 3 at 5. The answer is no, I really don't. A lot of brands try to launch in the energy drink space, and as somebody that years ago used to work for Walgreens and used to work for Quick Trip, right? I saw a lot of energy drink brands launch, come and go, and no one could ever really be successful, just to be quite frank. Though there was 2 companies that dominated always. It was Red Bull and it was Monster. And the only company we've ever been able to see outside of Red Bull and Monster come in and actually make a huge market share is the one right in front of you, Celsius. And so that's it. You have 3 brands that basically dominate the entire energy drink space. And so a bunch of brands come and go. Ghost has kind of come up over the last couple of years. I don't know if that one's lasting. I'm going to be completely honest with you guys, because you have to invest heavily back into your brand. Those Celsius displays you see, those fancy displays, those are not free. You have to usually pay stores for those major displays. And all that fancy stuff, that costs money. You need a marketing team behind you. You have to spend a lot of money back on your business. And that lowers your net income margins, but it drives volume, which then ends up driving net income margins, right? And so you have to play that game of constantly reinvesting back into your brand so you can make for a brighter day in the future. And so Celsius definitely understands that. The CEO of the company, John, he definitely understands it on a high level. And you see it. The proof is in the pudding, as they say, right? And so Celsius, I think, is a pretty exciting stock for the next several years. Next one up here, number 3 of 5 is AMD. AMD. This is a stock that, honestly, I bought so many shares of. I wasn't really planning on buying more of this stock. But the more I've looked at AMD. By the way, got the new 2026 private stock group membership cards. I still got in the plastic. I just received them yesterday. It's very, very exciting. When it comes to AMD, I was re-looking over my numbers and I'm like, gosh, this stock is still a huge buy. I'm up big on my shares. Yeah, the stock's gone up so much from where it was back in April of 2025 when the stock bottomed down in the 80s, right? But at the end of the day, there's still a lot of money to be made in AMD. And I'm like, I got to buy some more shares of this stock. So the thing you got to understand about AMD is they have three core businesses. One is their data center segment. Now, this is the most important business for the company overall. And on a revenue basis, and for what's going to be revenue in the future years, as well as their operating income, okay? This is going to be the big dog. It already is bigger than the other businesses, but this is like going to be the big dog in future years. Keep that in mind. The most important product in the company's history is the MI450. This is a chip that it seems like every big tech company wants. And so this is going to be a huge product for the company. It's the biggest product. Like I said, I posted this on X. If you ever want to follow me on X, I was linked in the description area of all my videos. I said on X, this is the biggest product in the history of AMD by a mile. And so the revenue story starts to get very exciting. The margin story and the profitability story starts to get really exciting in the second half of 2026. Now you may say, well, what if you waited to buy the stock until the product launches? You could do that, but the issue is, this is just my guess, there's going to be a lot of hype and excitement about AMD over the next 6 months. AMD is likely going to show off even future products as well in the next 6 months. They're going to get people very excited about what's going to happen for 2027's revenue, and might even show off some 500 series related products. So, and other products as well. So keep in mind, like, there's probably going to be hype cycle in AMD over the next 6 months in regards to new products they show off. And there's going to be so much excitement about MI450 going into production and what that's going to mean for revenue for the company. So do keep that in mind, okay? Now, as far as client and gaming segment, this is a big side of their business. They basically have two categories inside this segment now. One is their gaming business and one is their client business. Gaming, keep in mind, when it comes to gaming, it's not just about like computer gaming or desktop or something like that. They have big relationship with Sony, big PlayStation, big relationship with Microsoft and Xbox as well. And then they have their client business. Both those businesses grew very nice in the last quarter. Revenue was actually up 73% overall. And if you've ever heard their Ryzen line, that's that segment as well. So do keep that in mind. And then they have their embedded segment. This is a much smaller business, much less important, but it is a business that, if you think about AMD long term, this could become a much more important side of their business. This is where they're embedding chips into other products out there. And this business was down about 8% year over year, but this business is likely going to flip to growth again, in my opinion, in 26 and in future years. So that's a kind of a sleepy business right now, but don't sleep on it long term. That could be a much more exciting story. Now, Lisa Su, the CEO of this company, you always remember, these companies are being led by humans, right? And the CEO is very important. Lisa Su, the CEO of this company, shortly after she took over this company, was a $2 chuck. A lot of people thought this company was for dead. A lot of people thought this company was going under. They were going bankrupt. I think it even went down to $1.91 shortly after she took it over. So keep in mind, this company was done. Dunsky. She brought them back into, what is this company today? A $350 billion company. One of the most important companies in the world. A company that has a potential to be a $1 trillion market cap in the 2020s. If they really execute and knock out of the ballpark on the 450 series as far as getting that into production and, strong sell-through and all those sort of things, and then the 500 series comes and that's a banger, as well as getting the embedded segment back to nice growth. I mean, there's a potential this company could end up being a $1 trillion plus company in the 2020s. We're not talking in the 2030s. And so it's incredible what she's done with this business and how she's positioned it, right? Now, as far as my projections for the stock and why this stock is still a buy and why I still have to buy some more shares of the stock, look at my bull case for AMD. I have them doing 40% revenue growth on average per year for the next 4 years, essentially. Now, keep in mind, Lisa Su's talked about 35% growth rate. So I have them in my bull case doing a little bit better than what she has. She does typically sandbag, so do keep that in mind. Then do 50% net income growth on average as well. Gets the company in 19% net margins. There's very much a possibility those net margins could push easily into the low to mid 20s by 2029, given that their margins are expected to take quite big ramps up as the data center business becomes a bigger component. In this sort of scenario, I have the stock getting to the $800 to $1,100 range, which gives me a compound annual growth rate of 40 to 50+% pretty exciting. My base case, just a fancy way of saying what I actually expect for this company, 35% revenue growth on average, kind of, basically Lisa Sue's number there. 45% net income average. Once again, only gets to net income margin of 19%. We're not talking high numbers here. I'm probably sandbagging my own numbers. I'm going to be honest with you guys. In this sort of scenario, you got those sorts of growth rates, 50 to 60 P is fair. You're going to be a 672 stock price to maybe 800. It gives me a compounded growth rate well into the 30s. So my situation in regards to AMD is I have over $1 million invested in this stock across my accounts. The public account alone has $550,000 invested, right? Up $265,000, up 92%. Over $1 million invested across my portfolios. I got to buy more shares. There's still a lot more upside in AMD for the next several years. When would I cash AMD? I would consider starting to cash AMD and starting to take profits when the stock goes over 500. So let's say there's a major hype cycle in AMD this year. People start getting, flipping their flapjacks over this one. Maybe I start, and it goes to 500 plus. Maybe I start to cash a little shares here and there. But the moral of the story is this stock has a potential, like serious potential to go to a $500 to $1,000 stock over the next few years. And so, yeah, it's gone up a lot. Yeah, I'm up a lot. But at the end of the day, it's irrelevant. It's about where the stock is going likely over the coming years. And I can see a scenario where the stock over the next few years gets to $500 to $1,000 a share, right? If that happens, that means there's significant upside here in AMD. And so I have to buy some more dang shares of the stock. And it's as simple as that. I don't know what else to say. It's as simple as that. Number 4 of these 5 stocks is e.l.f. Beauty. It's a cosmetics company. Very affordable products. They have a few brands that they own. One is the e.l.f. brand. This is their big brand. Okay. It's a very successful brand. Go to Walmart cosmetics area. Go to Target cosmetics area. Go on Amazon. Go to almost every store out there. e.l.f.'s a very popular product. They have big shelf space now at this point in time. We call it around here e.l.f. on a shelf. Ticker symbol ELF on this one. But they also have a bunch of other brands, and 2 brands are worth noting in my opinion. One is this brand called Naturium that they picked up a couple years ago. Very successful in the skincare space, and it seems to be expanding rapidly. And the other business is this one, Rhode. This is one they just picked up in the last few months. This is Hailey Bieber's company. And it seems like that brand has a lot of exciting things. That's one of the hottest brands, honestly, in kind of makeup cosmetics over the last year. They continue to build that. That could become a very, very large business, very large component as the coming years go on. Now, this company understands marketing on a very high level. I've watched what they've done on YouTube over the years, Instagram, TikTok. It's been amazing. But this just shows you how forward-looking the company always is in regards to marketing. And some of the stuff you might look at and you're like, this is kind of silly. No, it actually ends up driving business. This just came out recently. e.l.f. Beauty launches a glow-up, redefining virtual makeup and community on Roblox. Roblox is a very popular game, and e.l.f.'s like, we're going to be there. If there's a lot of people using something, e.l.f. is going to be there to market. They don't care. They would rather be first and try to make a success of it than to have somebody else come in and do what they want it to do. They're willing to take a risk in regards to marketing, and they're willing to do whatever it takes. If there's a lot of people doing something, using something, they're going to be there. And so if that means TikTok, Instagram, YouTube, if it means Roblox, at the end of the day, they're going to be where people are. And they're very successful at what they do on the marketing side. Now, additionally, they're expected to, basically recently, they just announced they're going to raise price on their products by $1. Okay. That started a few months ago. Keep in mind their products are very affordable. A lot of their products, they emphasize here, 75% of their products are on $10 or under. So going up $1 is actually pretty significant for what that can mean for the company's margins and earnings per share in 26 and beyond. So in regards to numbers, you'll start to really see that hit in a very positive way in 2026 in regards to revenues, margins, earnings per share. And do I think it turns off their customer base? Absolutely not. $1 is not going to magically make their customer base say we're not going to buy the product or something. Now, something else to keep in mind is the prediction markets have it that the Supreme Court could overrule Trump's tariffs. They have it at about a 70-80% probability. If that does happen, ladies and gentlemen, that could be a huge boost to e.l.f. e.l.f.'s has to pay big tariffs in. They've paid big tariffs in. If those got overruled and let's say they don't have to pay the tariffs moving forward, let's say they got a refund, it would be massive for e.l.f. stock prices. No debating that. And keep in mind, would they decrease their product price by $1? I don't think so. So they would have gone up in the dollar. Then let's say they don't have to pay the tariffs anymore. oh my gosh, like it's getting your cake and eating it too, right? I don't want to get too excited about that, but it is something to kind of keep in mind here, right? Now, in regards to ELF, I've held this stock for years, right? And this is one in the public account I've owned since February 27th, 2019. Bought it at $7.28 a share. And I held the stock through Trump tariffs 1.0. It's not something they haven't gone through. They understand how to mitigate the cost of doing business in regards to tariffs. And they made it through, and they made it to become a stronger company than we've ever seen before. So I have no doubt that ELF can, if the Trump tariffs don't get overruled and they have to continue to pay the tariffs in future years, I have no doubt that the company's going to manage that very, very well in future years, okay? Now, additionally, here's my bull case for ELF. In my bull case for ELF, I'm getting to $177 million in net income in 26 and $1.7 billion of revenue in 26, okay? And then building from there, 20% a year, top line, 30% bottom line, only getting to 13% net income margins, which is not high. 35 to 40p is pretty fair for a company growing top line, 20%, bottom line, 30%. We're talking about a stock that gets to 245 to 280, 34% CAGR, low end, 38% CAGR, high end here, ladies and gentlemen. That's pretty darn attractive, is it not? Base case, just a fancy way of saying what I expect with maybe a little conservatism in there. I'm getting just under $1.7 billion of revenue in 26, $177 million still in net income in 2026. That would be net income margins of 11%. Now, as far as where they're putting 2029, $2.5 billion of revenue, $307 million of net income, 30-35p is pretty fair for a company like this. Only 12% net income margins, not crazy at all, right? That's a 165 to 193 stock price there, 21% CAGR on the low end, 26% on the high end here for ELF. It's very attractive. What about my bear case? Well, my bear case has them doing $1.6 billion of revenue in 26, $177 million still in net income in 26, but then only doing 9% in revenue growth per year on the top line and the bottom line. And so 23 to 28p would be fair for a cosmetics company growing 9% top line, 9% bottom line. That's a $95 to $116 stock, which still gives me a compound annual growth rate somewhere probably in there with S&P 500. If I can run a bear case and probably still get an S&P 500 return, that's pretty darn attractive. So that's why ELF remains a big buy for me right now. And call me at $200. When the stock is to 200, okay, then we can talk about, do I want to start to sell some shares? Do I not? But for right now, like at $70-something a share, the stock's $70-something a share. Like, it's, in my opinion, for anybody that's a long-term investor, it's the most attractive opportunity I can find in the cosmetic space. The only thing I think can think close is Estee Lauder EL stock, which is a high-end play. But yeah, call me at 200 in regards to this one. Number 5 of 5 up here is, this one's a very hated stock, and it is, I gotta warn you, PayPal. Ticker symbol on this one, PYPL. PayPal, we all know it. I mean, one of the most famous fintech brands in history, and they also own Venmo, which is very popular as well, certainly in the United States. Now, you might think this business is dead or dying or something like that. That's just not reality. If we look at the numbers out of this company, they show nothing but very strong company and very strong health. Total payment volume, TPV, grew for the company in this latest quarter, 8% year over year. Operating income grew 9%. This is on a GAAP basis, generally accepted accounting principles. You can't fool this one. Net income, 24% up year over year. Earnings per share, 32% up year over year. Net cash provided by operating activities up 22% year over year. That's not a dying business. Your total payment volume's up 8%. Your net income's up 24%. Your earnings per share on a diluted basis up 32%. That's no dying business there. That's a strong company. As far as on a non-GAAP basis, free cash flow is up 19% year over year to $1.7 billion in this latest quarter, and adjusted free cash flow came in at just under $2.3 billion from $1.5 billion. That was up 48% year over year. It's no dying business, ladies and gentlemen. That's a strong company. That's what we have here with PayPal. Now, additionally, PayPal just applied. It came out in the last couple of weeks. They applied to basically become an actual bank as well and have some banking-related products. Probably puts a little less emphasis on them outsourcing different products and services, and allows them to ultimately even lend to customers more easily. And so it seems like, I think PayPal's seen the growth that SoFi has, and I think they want some of that. They might never get to the sort of growth rate SoFi has, which is another stock of mine, which we're not talking about here today. But if they could push total payment volume to be up 10% plus, if they could push revenues up 10% plus, like, gosh, this company would get a full re-rating in regards to the valuation of the stock, okay? No, the nice thing about this company is when they apply to be a bank, you might think, oh, gosh, they might get a valuation derating or something like that. There's no valuation downside here for PayPal. And the reason being is you look at the forward P's 11, the 2-year forward P's 9. There's no valuation downside. If this was trading, like PayPal back in the day used to trade at P ratios, forward P ratios of 35, 45, 55. And all of a sudden you heard news like come out like this, like the stock would crash instantly, like down 20, 30%. But since they're already at this dirt cheap dog valuation, there's really no downside for the valuation in regards to PayPal. And that's pretty exciting. What are my projections for PayPal? Well, my bull case for PayPal has them growing 9% revenues on average per year and 11% net income per year, okay? You got 9% top line, 11% bottom line. 2025 P is pretty fair. That puts the stock somewhere between 158 and 197 come 2029, which gives me a compounded annual growth rate of 28% on the low end and 35% on the high end. Very attractive. My base case, just a fancy way of saying what I expect. What do I have? Well, 7% revenue growth on average per year in 2026 to 2029 and 9% net income growth on average per year. Do keep in mind, PayPal's doing big share buybacks and likely will continue to in future years. So the earnings per share might go up much more than kind of my intermediate case here. So there could be actually much more upside to PayPal stock than what you're seeing here. So just keep that in mind. And so in this scenario, stock gives me a compound annual growth rate on the low end of 22%, high end 30%. Talking about a stock that goes 132 to 169 by 2029 or in 2029, right? What about my bear case? This is very exciting. In my bear case, I'm only doing 3% revenue growth. This would be pretty disastrous for PayPal. 3% revenue growth, 5% net income growth, right? For a company growing top line or, bottom line 5%, they probably doing share buybacks, probably, 7% earnings per share up per year or something like that. 14 to 17 PE would be fair. I still get a 11% to 16% CAGR on this stock, which is very nice. For even a bear case, like once again, that's a bear case that's going to perform better than the S&P 500. If I can run bear case on a stock and it outperforms S&P 500 over the coming years, I'm going to take that every single time, right? No, PayPal has been called Pain Pal for years because the stock's been a bad stock, right? And for good reason. But I think it turns into Fun Pal 2026 and 2027. And I think we'll see a valuation upgrade to PayPal overall. And as long as Alex Chriss keeps running this company the way he's been running it, which is continue to boost up the numbers, like I think there's much brighter days ahead for PayPal stock price, okay? Ladies and gentlemen, you want to apply to German Private Stock Group, get access to all my course curriculums, all that good stuff. That will be the pinned comment down there. It is closed to new members right now, but that's okay. We'll put you on the wait list. So when we do reopen, you'll be notified and you'll be front of the line in regards to that, okay? We have drama, ladies and gentlemen. We have assets absolutely collapsing right now. Gold price just went down about 5%. Silver price down over 13%. It just out of nowhere just dropped over 13%. I want to share my opinions and perspectives on gold and silver. One of these assets I personally own. I loaded up on it years ago. No one really was paying attention. Talk about that. Talk about my perspective and opinions. What's going to happen there? Is this money going to move into stocks? All that good stuff. I also want to speak about Alibaba for a moment in this video here today. This stock has fallen over 20% since the start of Q4. So I thought I would share perspective and opinions on that one. From there, we're going to react to the Professor, Jeremy Siegel. It's been a minute since we reacted to the Professor. So he went on CNBC a few hours ago, looking forward to hearing his opinions and perspectives. 2026 will be the year AI software, after intense focus on hardware. I bought some software stocks recently, so looking forward to hearing this gentleman's opinions, perspectives here, and kind of sharing my opinions and perspectives there. Oracle and Meta could be the canary in the coal mine for the tech trade. Oh boy, that's going to be an interesting one to react to, so going to react to that one. And then we're going to talk about this. I posted this on X. If you guys ever want to follow me on X, it's always linked in the description area of all my videos. But I posted this one here today. I asked people to kind of predict where the public count will end 2026, and I shared my perspective. I said that the public count, I believe, will be at $4.7 million at the end of 2026. I'll tell you why I believe that in this video here today, okay? I appreciate everybody for joining me in this one here today. Well, one thing only I need from you guys, if you could just hit that little thumbs up icon. For everybody that's already done it, thank you. You are the best. And if you haven't done it, please join us in the thumbs up gang. That's all I ask from you. I don't need anything else. All I need from you is a little thumbs up for this video here today, and that's it. Additionally, if you want to be subscribed to the channel, you can certainly subscribe. We're at a lot of subscribers. I don't know the amount, but it's a lot. Also, exciting day in the private stock group. Over the past week, we had 3 people hit 7-figure club, so $1 million plus in their portfolios, and 8 people hit 6-figure club, so $100,000 plus. A little slowdown recently in regards to the market, I would say kind of in Q4, but still good to see some people reaching that milestone of $100,000 plus or $1 million plus. Obviously, it's a big accomplishment. Also, exciting day, just received the new 2026 private stock group membership cards. They look great, and that is an actual stock. If you didn't know, that, ladies and gentlemen, is a stock. You might even own it, some of you guys out there. If you're looking to apply to join my private stock group, that is closed right now. However, listen, pin comment down there, click on that, fill out the form. That will help you get to the front of the line for when we do reopen it at some point in 2026, okay? You could wait until we reopen it to apply. It's going to be mayhem there. A ton of people are going to be applying. Like hundreds of people are going to be applying. So you'll get like way to the back. If you apply now, just get on the wait list. You'll be to the front of the pack when we do reopen it. So do keep that in mind, okay? Gold, silver. Which asset did I buy a bunch of a few years ago? Well, I bought a bunch of silver bars several years ago and put them into storage. Now, this was back kind of at the end of 2021. People were like, and for good reason, like, what? Who buys silver bars? What a freak. What are you doing? Like, if you're a millennial, what do you buy? You buy Bitcoin, you buy maybe gold, but even that's like, people are like, but gold's a lot more popular, obviously, than silver, or you buy stocks, right? So I started loading up on silver bars, big silver bars years ago, put them into storage, right? And I've held them over the past few years, and silver's done amazing, absolutely amazing over the past few years. And so it's a very interesting time with silver because it's gone on this insane bull rally. Then all of a sudden to see prices collapse 13% in like a snap of fingers. Weird. That's not usually how silver doesn't just go down 13% for no reason. Like if you thought, like if Bitcoin moved down 13%, that would be huge. People are like, what? Like X would be going crazy. Like send Bitcoin down 13%, people would be losing their mind. Like if it went down 13% in a day, oh my gosh, everybody would be paying attention, right? And Bitcoin's known as a lot more volatile of an asset than something like silver, right? But my opinion here is these things have had a big run, almost too big of a run, right? Where it's like not normal. You almost get like potentially people over leveraging into this. It's weird right now. I've even heard some of the ETFs are like oversubscribed. Like it's a weird whole situation in regards to the gold silver dynamic. There is a potential that you could get some profit taking out of gold, out of silver, and that money could go into the stock market. It's a potential, but usually people aren't playing those assets to then look to put it into stocks. However, since those assets have had such insane momentum, I do actually believe there has been a certain amount of money from the momentum trader side that has flooded into silver and gold over the past few weeks, if not the past few months, because the momentum's been so insane. When we're talking about there's different pockets of people in the stock market and in the financial market, right? There's people that will only buy stocks. There's people that only buy growth stocks. There's people that only buy dividend stocks or value stocks. There's people that will only buy gold. There's people that will only buy silver. There's people that will only buy gold and silver, right? We can go through it all. There's all these groups, right? And then the stock market, you have the day traders, you have the algos, you have the swing traders, you have the momentum traders, you have short-term investors, which is kind of like the people thinking about like a year or two out. You have longer-term investors, which is people like me that are usually thinking 3 to 7 years out, right? And then you have the Buffetts that are like, we're taking it to the grave type stocks, right? So knowing that, understand there's a big pocket of people that are what are called momentum traders. These people basically, their objective is to go asset to asset. Whatever has a momentum, they're going in it. If Tesla stock has a momentum, they're putting money into Tesla stock. If Palantir has momentum, they're putting money into Palantir stock. If gold has momentum, they're putting money into gold. If Bitcoin has momentum, they're putting money into Bitcoin. If Ethereum has momentum, they're putting money in Ethereum. If silver has momentum, they're putting money in silver. It doesn't matter what it is. If it has momentum, they're putting money in. And so understand there's been a lot of that money going into gold and silver over the past few weeks and over the past couple months, right? And it works until it doesn't work, right? And then you get all of a sudden a massive flush. And you get a lot of those individuals all to sell at once because like, crap, it's losing the momentum. And that's how all of a sudden you get a 13% downside like that. I hope that makes sense to everybody out there. Because once those momentum folks realize, oh crap, it lost some momentum, they're out. No, sometimes those assets can bounce back. So it's possible silver could bounce back, right? And if it does bounce back, some of those momentum traders will come back in. And they might even buy at a higher price than what they sold at. But it's their little game they like to play, right? Not the game I like to play. That's a stressful game. It's actually much harder to make money than you might seem. Because a lot of times when you're looking for the momentum, you're looking at things that have already run big. And if they already ran big, doesn't mean the run's necessarily over. But now you're getting to scary levels. It's like, imagine you watch Palantir run from, 125 to 200. So you're like, okay, I'm hopping in Palantir because that's got the momentum, right? Okay. Could Palantir go 200 to 250? Sure, it could have, but it didn't, right? It went 200 down to, I don't know, where Palantir bottom out recently, like 170 or something like that, right? And you as a momentum trader, you're not going to hold down there and hold back up. What you're going to do is you're going to flood out. You probably got out at 190 or 180 or something like that, right? So you didn't go all the way down to 170, but you took it out on the end. And so that's a risk that certainly comes along with that. It's like I said, it's not my game. I don't like to play it, but that is definitely something that's going on there, and it's worth keeping an eye on. Alibaba, these Chinese stocks, sometimes get asked about them, Alibaba, other Chinese stocks. How do I put it as simply as possible? Chinese stocks are unownable. They're unownable. You can't own them. Can't do it. Doesn't mean you can't make money from the trader side if, Chinese stocks catch a bid here or there, but you can't own them as investments. You just can't. No one wants to own them in the end. People will like to trade them. Once again, momentum. If Alibaba has momentum, the momentum traders are going to Alibaba, right? But there are a lot of ADR situations. You're owning supposedly piece of the company, but it's in some island somewhere, right? And it's like you don't actually own the company. And China, Taiwan, we don't know what's going on with that. Anytime risks are involved in regards to China, Taiwan, all these stocks sell off heavy, right? Anytime you get any sort of worry about the Chinese economy, these stocks sell off heavy. Anytime you get any worry about the financial markets in general, these stocks sell off heavy. I mean, it's difficult. They're very, very difficult. And they're horrible long-term investments. Horrible. Like you could look at almost any Chinese stock that went public in the past 10 years, 15 years, and almost every single one of them. Horrible investment. You either lost money, or if you did make any money, it's a very small amount. Horrible, awful, awful. Whereas you look at American companies, right? I give you a list a mile high of companies that went public in the past 10, 15 years that if you would have bought it when it went IPO, you would have made a fortune. And so Chinese stocks, difficult, man. Very, very difficult. And so they're unownable. I can't buy it. And I like Alibaba's business. I used to own it years ago. And then I just realized, oh gosh, you can never win. You can never really win. I think I made a little bit of money on Alibaba, but it was like nothing compared to if I just stuck with American companies. Like back in those days, I think when I owned Alibaba, that was when I was a big investor, like in Tesla. Gosh, if I just had that Alibaba money in Tesla, go through the whole list. So anyways, Chinese stocks, no bueno. I don't like them. You just can't do it, man. Okay, next up here, the professor. Jeremy Siegel.
At Wisdom Tree. And once again, it's good to see you. Happy New Year. Happy holidays, Jeremy.
Thank you, Joe.
Been a good time to be pro-U.S. economy for the past year. Once again, pro-stock market. We're the best economy in the world.
Third and fourth GDP numbers. I mean, we just get.
Oh, this is so funny. Great U.S. economy. Who are we talking to? Trump voters. Oh, yeah, great economy. This is the best ever. This is an amazing economy. Biden people? Oh, or Democrats? Oh, there's a horrible economy. It's just so funny. As soon as the person in office changes, I watched Republicans complain about the abiding economy all those years, right? Well, the Democrats oh, the economy's great, right? And then I watched things flip now. That Republicans now feel like things are great, and I'll see like business owners, I hear from business owners or different people on social media and whatnot about, with everything going on, everything's so bad out there. Oh man, it's so tough to make it. Like it's like, oh gosh, I wish people didn't have to get so committed to their party that it makes them feel like things are bad if their guy's not in office. I wish I could just change people's mentality to just be like, who cares who's in office? It's your job to go make money, to go invest money, to go be successful out there. But unfortunately, so many people are victim mentality that if their guy's not in office, everything's doomed. It's so bad out there. Me personally, it's all the same. You know why? I don't vote. I don't get tied up in all this emotional crap. And some people get, oh, you should vote, you should vote. I don't care. I put me in the dirt. I would be happy if I had died, never voting once. Cool. Everybody else vote. Good for you. I don't care to vote. I'm never going to put myself in that victim mentality that I watch countless people go into. As soon as their guy's not in office, it's all doomsday. It's all bad. It's like the whole world turned dark suddenly, overnight. And then somebody's guy's not in office, and then their guy gets in office, and suddenly it's like, whoa, it's rainbows out there. I'm not going to put myself into that victim mentality for 4 years, 8 years every time. No, thank you. No, thank you. Like, I watch people do that and put themselves in that victim mentality for 8 years under Obama. I watched them then do it for 4 years under Trump. I then watched them do it for 4 years under Biden. Now they're going to do it for 4 years under Trump. And it's just different sides putting themselves in the dark place. And I'm like, it's crazy. And it's widespread. Speak to a lot of Democratic voters and they'll laugh at what that gentleman just said. It's crazy, man. It's just, but that's the day and age we live in.
The St. Louis Fed came out with a 3% estimate 2 days before Christmas. Of course, we had that plus 4% for the third quarter. And even with a negative first quarter, that would make 2025 faster growth than the last year of the Biden administration, even with all the chaos with the tariffs.
That is the economic backdrop, obviously, but I was really referring to 19%, 18. I don't know. We may hit 7,000 before the end of the year on the S&P. It's possible. I'm not saying we will, but the third or fourth really good year, third at least.
Yeah. And next year, I think, I know it's been predicted for a long time because the streak of the Mag 7 is really quite unprecedented. But, next year, I think S&P, which is very weighted towards, of course, the tech and Mag 7, might be less than double digits, 5 to 10, still good. The non-Mag 7 could be 10 to 15. With a Mag 7 finally positive, but in the low single digits. Now, of course, it's very difficult to make one-year estimates, but that would be a turnaround, certainly from the last 3 years, but still leading to a very good market in 2026. So it's, I think, a lot of good headwinds, good tailwinds pushing forward. We have bumps. We have 3 bumps in January. We have, of course, another potential government shutdown. We have the Supreme Court perhaps going to announce on what it's decided on tariffs. And we have perhaps finally the announcement from Donald Trump about who our next Fed chairman is going to be. These are very important issues to get through, in addition to what is GDP and what our earnings and what our margins. And we might all get those in January. So it might, and certainly one of them, the shutdown has to be either solved or extended in that month, and the other 2 look like they're likely to be announced. So we need to get through some bumps, as I say.
Okay, so let's assume January is going to be brutal. Say, might not be, but let's just assume it's going to be a brutal month. What do you do prior to January? Nothing. Do you sell out all your stocks? No. Okay, maybe things go left and it gets ugly. Maybe it doesn't. Who knows? But the moral of the story is you don't create a bunch of taxable events because stocks might go down. They might go up. Yeah, they might go down. Who knows? Maybe they go down. Maybe the market's down 5, 10, 15%. Maybe it's up 5, 10, 15%. Who the heck knows? Like, you don't go change your whole portfolio and your whole strategy because something might happen or might not, right? Let's say the market tanks in January. Big drama fest. Okay. Whew. What do? Buy the dip. Buy the dip. Very simple. Where's the stock market 10 years from now? What do? Buy the dip, right? Like, it's a very simple game. Very, very simple game. People overcomplicate it. They confuse themselves. They put themselves in bad situations and they screw up, right? I mean, I received a lot of comments on this channel, the main channel, back in April of 2025 that people were selling out. Trump's gone crazy. Market's going, another 50% down, 30% down, 20% down. I'm leaving the market. I'm out of the market. I'll buy back and when everything gets normal again. You know how much of the market's bounced since then? I could give you a long list of stocks that have bounced 50+% from those April lows. And a lot of them that have over doubled up since then. Some that have even tripled up since then. Whew. And you sold out because of what? And it's like, in the grand scheme of things, that won't even be remembered. Like, literally, you think people are going to be talking about April 2025 10 years from now? Even 3 years from now? No. People won't even remember it, like, unless it's people like myself that are super in the stock market. Oh yeah, I remember that April 2025, the tariff drama. Oh, was it called Liberation Day or something? That was crazy. I remember that. No one's gonna remember that. Are you kidding me? You have to have like a massive meltdown in the stock market, like great financial crisis, for people to actually talk about it and make movies about it, and tech bubble popping, like those sorts of things, right? Like. This stuff is like, people don't even.
But if we
can
can get through those successfully, it still looks like a positive year for me.
Right. A lot of times the default forecast at the beginning of the year is that 7 to 8% long-term average for the S&P. We hear that a lot, and usually it either does a lot more or maybe even a down year. I don't know if people ever forecast a negative year. Can't remember the last time someone did that.
Oh yeah, of course, dude. Just a couple years ago that happened. If you looked at what, I think I still have it. Let me look here. I think I still have it. Let me look. Wall Street 2023 S&P 500 targets. Okay, this is what Wall Street thought the S&P would end at in 2023. Go ahead on your device right now and Google, what did the S&P 500 finish at the end of 2023? Tell me what the number is. And look at the number the Wall Streeters had. Interesting, huh? Very, very interesting. Additionally, look at this. This was 2024. This is when Wall Streeters were not as bearish going into 2024, but they were still kind of bearish. Look at what Wall Street had for end of year price targets for the S&P. 4,200 from JP Morgan, Barclays and Morgan Stanley at 4,500, Wells Fargo 4,625, Goldman was at 4,700. Go ahead and Google, where did the S&P 500 end in 2024? So, the moral of the story is, these Wall Streeters can get very bearish, usually at very bad times, and they can get very bullish at very bad times.
I mean, when you take a real out of consensus forecast, you're either, wrong, or you become a hero, and you can decide,
exactly.
Hey, I'm gonna shoot for the stars here. So we do have a few times when people do take those out of consensus forecasts.
We've had some people on say, all right, multiples stay where they are. So we're just going to purely do the S&P advance based on earnings per share growth for the next 12 months. What do you think we can do there? Double digits?
Well, I think in that case, could we get 8 to 10%? Certainly. With the Mag 7 slowing down, as we see every year, it's slower, but still in the high teens or low 20s. But we see PE compression because they're over 30. I mean, let's take Tesla's side, which is like 200. The others are, 30 for companies that are growing 20% a year, even with a decelerating growth, is not what I call a bubble. So I'm not going to predict that, it's going to last forever. I'm not going to predict there won't be disappointments of Mag 7. But I've been saying all along that those have been calling this a bubble or saying this is, 2000 have not really been looking at the facts behind the figures.
Interesting. Okay, next one up here, AI software stocks.
Partners. Byron, it's great to have you. So what do you think changes in 2026?
Wonderful to be back. And this is the extension now of the AI build. And we can just look back at the cloud story to see how this plays out, which is the fundamental pieces go in first, which is the data centers, the compute, and then the core infrastructure foundational layers, in this case, the foundation models. And then 1,000 flowers bloom on top. It's the upstack applications. And so as you look at the coming trillions of dollars of data center spend, going from about $550 billion a year to $1 trillion a year shortly, there's about a 9x multiplier that comes for implied enterprise value of software because they are the downstream customers of the data centers ultimately. That's the bet we're making, which is the build that's coming. And ultimately, if you roll it forward to the $5 trillion of combined spend over about the next half dozen years, that implies about $45 trillion of software and application layer value that should be coming down the next several years. And that's the bet that we think is the next most exciting bet to make.
I wonder if that does that lift some of the worst performers that we've seen this year. Adobe's down 20%. Salesforce is down 22%.
Guess what? Two stocks I've been buying very heavily the past few months: Adobe and Salesforce.
Workday down about 18%. All on this, software versus AI trade.
So I do think that first-gen cloud and software as a service is oversold, but it's not obsolete. And so there's going to be a separation there. Who are the beneficiaries of AI that are going to lead the next cycle versus those that aren't going to make the transition? And so if you look at a ServiceNow or a Viva, I think those are names that are really interesting to watch to see how they incorporate AI. And I think that there's a little bit of value left there, that they're under their peer group. You look at some companies like a Cloudflare, an AppLovin, even a Snowflake, and at their current values, they're the high flyers in this kind of Gen 1 ecosystem. And I have to argue the opposite, which is that perhaps they are overvalued relative to their point in time and the challengers that are coming. And the Databrickses and the ClickHouses may be more interesting bets for this next cycle.
But I would assume there's companies that we've yet to even hear from, conceivably. I mean, if there are going to be hundreds of applications and thousands of agents, I would assume it's not just the names that you just mentioned.
Very much so. And that's the interesting bet that will start to reveal itself. So everyone knows the OpenAI, the Anthropic, the XAI, Google Gemini. That's wave one and step one. These foundation models are now in place. We do think there's continued growth there. They could double, triple, 4x over the next several years and be fantastic outcomes. However, it is that entire layer of next-gen companies that are starting to be built on top. And there's this narrative in the that the foundation models are going to do everything and that their agents and agentic worlds and frameworks are going to take over all of software and eat it all. I don't buy that at all, nor do we at Bessemer Venture Partners. It's not going to be a four-vendor ecosystem for all of software in eternity. There's going to be this wave of companies being built, and we're just starting to see those now. I don't think those are going to be your IPOs in 2026, but I do think by the end of 2026, some of those transitional companies like the Canvas of the world, et cetera, may be candidates. And then for 2027, we're going to see some of those AI native application companies really burst onto the scene for the public's investors to bank on.
Yeah, I could see that. I could see a lot of the private companies go public in 27 if, big if, the market's good in 26. IPO market's usually driven by, is the market good or not? If the stock market's good and there's appetite for it, you'll see a lot of companies in the AI space go public in 27, right? I will say, if I was an AI-related company, I would probably be trying to go public ASAP because there's still so much hype and excitement around AI right now. There might not be as much in 27, but who knows? Maybe there's even more. Like, we'll see how all that shakes out, but Then again, I'm not somebody that runs a private company. I'm looking to take public, right?
Market strategist at Freedom Capital Markets, CNBC contributor, buddy from the stock exchange about a decade ago.
Yeah.
What do you say?
Good times. What do I say? Wow. When looking at silver, I mean, this move is parabolic. It broke out of a 15-year base, and as a technician, this is exactly what you want to see. It's following in the footsteps of gold. But what we've had over the last 2 weeks, this run-up, excessive would be an understatement. When you look at it from a technical perspective, the RSI hitting 90, the amount percentage-wise, it was above the 50-day moving average, over 45%, 95% above the 200-day. A bit extreme. And then when we saw the CME put those margin requirements in, that kind of got rid of some of the riffraff, and it's pulling back. I don't think the pullback is over. I do like it on a long-term basis. Great breakout, but I would wait to the mid-60s to get back into it. And then there are other concerns. When silver's breaking out, Elon Musk tweeted this weekend that, this is going to have ramifications on a lot of these technology sectors stocks. Copper breaking out, nickel breaking out, platinum, palladium, we don't talk about those. Also euphoric, coming back in. I think the trade for now is over. Let's see if the pullback is viable.
Jay, there's so mumuch risk in this market. I mean,
a friend said recently, because he brought up copper there, he said, you might want to look at copper. It might be the next one up to make a big move. And I said, yeah, it's possible. But I don't like copper. Here's why. As soon as you get economic risk and people start getting concerned about the economy, copper tends to perform horribly. Suddenly, like that, drops massively. And I don't want to play copper from like a long-term perspective. And so all it would be for is like a trade, and I don't like to make trades. The only somewhat trading related thing I like to do sometimes is hedge my portfolio, right? Which is a short-term call on like basically putting insurance out there for the next 6 to 12 months. If things go bad, like this hedge should appreciate greatly, help balance out the portfolio, right? 1 to 3%. That's it. Outside of that, I understand people want to look at copper. Maybe that's the next play. I don't like it. I don't like it at all. They can play that, do that game. I'm just not interested. Silver, when I bought silver, it wasn't just that. Silver was a long-term play for me. I was planning on buying those bars and holding them years, and I'm still holding them, right? Happily. And so if silver continues to appreciate greatly over the next 3-5 years, that's fine with me. That is what it is. But that is interesting about this could actually have negative ramifications for some companies and cause them to raise price and actually cause inflation, which is problematic. So that is an interesting thought.
VIX is down, around 15?
15? Yeah.
But there's so much risk, and we were just talking about how Caterpillar had this great year because it's part of the data center story now, and there's nothing that's exempt from this story. How does that set us up for 2026? How cautious are you, or how bullish do you continue to be?
Well, I'm cautiously bullish, if that's a term. I'm looking for about 3 to 5%, below average year of returns. But what you're going to see, we're going to have these pockets of euphoria. We saw it with nuclear trades. We see it with the AI build out. We just seen it with some of these commodities spiking. But now we need to look at the bottom line and find some stocks that have done okay, but still have room to run. And so when I look under the hood, today, no one's talking about this. ExxonMobil hit a 52-week high, broke 120. All right, this stock has knocked on that ceiling. Technical resistance level just broke out with crude under $58 a barrel. It's telling me something, that this stock has room to run. And then if you're looking for something from a risk-reward point of view, this is a good name to be in, because my downside risk, if it breaks 120, 117, I'll get out. The trade didn't have legs. But when you look at pockets of momentum, we saw it with commodities. It could be energy next. So watch that one.
Transports?
Transports, love the transports, broke out long term. Tesla and FedEx. Tesla, not a transport, consumer discretionary.
Right.
Yes, they build cars, but it's not a car story. I think that is a stock technically that's poised to make a nice run into 2026, breaking out on a 1 year and a 5 year term basis. And then FedEx, watch FedEx, 300. It's knocked on that door several times. We're in the 285, 290 range right now. If it breaks out, it's only up 7% year to date, made a hell of a run. That's the next one to move. And then watch the coattails. UPS starting to turn as well. So I like the transports, especially FedEx, UPS, and some of the shippers.
What stock?
Tesla. Listen, Tesla, you want to know if Tesla's going to go up or down? I'll tell you if it's going to go up or down. If the market's big risk on, Tesla's going up. It's as simple as that. If the market's going down, Tesla's going down big. It's as simple as that. Look at Tesla over the past 3 years. Stock's done amazing. You know why? The market's done amazing the past 3 years. It's been a huge, huge risk on market the past 3 years. And Tesla's gone right up along with it. Look at 2022. 2022, bad year, certainly, for the market. And Tesla got obliterated. I think Tesla went down 60 or 70%, if I recall, in 2022. It's like, it's not rocket science here. Tesla's a risk-on asset, kind of like Bitcoin, right? And if the market's raging higher, Tesla's going to go up with it. If the market's going lower and lower, Tesla's going down in Chinatown. It's as simple as that. And the moves are exaggerated on both sides of it. They're exaggerated on both sides. It really doesn't matter what's going on with the fundamentals of the business, right? Tesla always trades at ridiculous valuations. Everybody and their grandma knows it, whether you're long or short the stock or whether you like it or you don't like it. Everybody knows that. Tesla's a momentum name. It's always been a momentum name. It still is a momentum name, right? And that momentum works both ways. And so that just is what it is. Like, I don't know what else to say about it, right? Tesla will continue to make progress with full self-driving, with robo-taxis and those sorts of things in 26, but it's all irrelevant. Market goes up, Tesla goes up. Market goes down, Tesla goes down. It's pretty simple.
Or commodity, whatever it is the canary in the coal mine for this market? Is it Bitcoin?
No, I still think Oracle has to prove us, that issuance issue is a red flag. And technically, it's broken down. It's made it back, but that's more of a relief rally. I'd like to see Oracle another solid quarter. It's got new leadership there and debt problems. These are things that I don't like when picking stocks, and it's in a downtrend. So Oracle's the one I'm watching. Meta, let's see if that can come back. That's another one that's broken down. We don't talk too much about how that reacted after last earnings. The earnings were solid, but that AI spend is being, punished, not rewarded now. So those are the two that could be the canary in the coal mine to take us a little lower and drive technology lower, which would be a stumble for the market overall. But I still think the broadening is the story, and we're going to see it in some of those names like the transports, like energy.
All right.
Meta earnings were not solid. Meta earnings were great. What are you talking about? The revenue grew, 26% on a constant currency basis? 26%? Are you kidding me? Like, for a big tech company to grow revenue at that sort of rate, who else is doing that? The only company I can think of in big tech land that's growing faster than that is NVIDIA. That's it. They're beating everybody. Come on, man. Alrighty. Next one up here. So, prediction on where the portfolio ends 2026. So, I said $4.7 million. Now, why do I think that is the question? A few reasons. I think Meta can get it back together in 2026 as that year rolls around. When I say get it back together, I'm talking about the stock price. The only thing I worry about with Meta is the depreciation and how much depreciation they're going to have to take next year. That's it, honestly. I'm not worried about anything else in regards to Meta. Revenue growth looks great. So I think Meta can come around as 26 goes along. 26 should be a great year for AMD stock. Obviously, it's going to be a huge year in regards to their new chip in the market, which is really going to hit in the back half. What you could have happened for AMD, though, do keep this in mind, is you could have a situation where the first half of the year is amazing. So much hype about 450 and everything going on there and what that's going to do to revenue growth rates and projections and Lisa Su maybe showing off new products. So you could get a situation where AMD is a banger the first half of the year and kind of lags the second half of the year when 450 is actually in production, when the revenue actually starts hitting. That's a possibility. And so just something to consider there. But overall, it should be a very good year for AMD stock. Amazon, same exact thing. AWS continues to accelerate. If they continue to accelerate AWS, I think you'll see more momentum in Amazon. Estee Lauder should have a good year. That's a turnaround play and it looks stronger. Palantir, complete wild card. Like Palantir, at this time next year, I wouldn't be surprised if Palantir is 140. I wouldn't be surprised if it's 220. I wouldn't be surprised if it's the same exact price it is now. Why Palantir is a complete wild card because it's a momentum name. So yeah, stock market goes complete risk on. Palantir does well. It doesn't. It's not going to do well, especially given that revenue growth rates likely peaked last quarter or will peak in the next quarter. Right? Celsius Holdings should have a good year there. We have Nike. Turnaround, I think that stock will get a lot of respect. Cheesecake, I think more people will come around to understand the story in regards to cake. and the North Talia opportunity and Flower Child opportunity. Google continues to have momentum. Great company, obviously, and people are very excited about their AI opportunity. They're looking really good with Gemini now at this point in time. I'm hearing more and more people switching over to Gemini from ChatGPT. So it does look like Gemini's continue to take market share. So in 26, what you could see is Gemini continue to take significant market share in 26. If it does, Google stock's probably going higher. As long as our earnings are good, which our earnings should be good all year. As long as our earnings are good and Gemini continues to take market share, Google's going higher. SoFi, a little bit of a wild card in regards to SoFi for 26. PayPal, I think PayPal's going higher in 26. Adobe, I think is going higher as well. Disrespected dog stock. ELF, I think that one's going a lot higher in 26. Revolve, wild card. My hunch is higher. AXP really depends on the state of the economy next year. If the economy stays solid, AXP will be fine. If the economy weakens considerably, AXP will go down, which any down move in AXP is a buying opportunity. Honest Fubo, kind of wild cards there. I'm expecting higher, but they're wild cards. Salesforce, I'm expecting higher. Tesla hedge, that really depends on the market, right? All right, guys, appreciate you joining me as always. Thanks so much for being here. Once again, pinned comment down there if you're looking to apply to your own private stock group so you can get to the front of the wait list, essentially, come the time when it actually reopens. I think we already have, I want to say 100 or 150 people on the wait list as of right now, but that's not that many compared to when I reopen it. It's going to be crazy. Okay. All right, guys, much love as always and have a great day.